Time for the latest earnings outlook now with Research Director Shiraz Mian. Shiraz, something new has emerged here that's caught my eye after all of the talk at the beginning of the quarter for Q1 being maybe so-so, maybe not being so good, maybe being disappointing. Now I'm beginning to see talk on the wire that we could be looking at record quarterly earnings here for Q1. What's going on?
Yeah, the level of earnings, the absolute dollar level of earnings has been bouncing around record levels. When we were talking about earnings, as you rightly mentioned, there was the question of growth. And growth outlook was so at the start of the earnings season because the comparative period in the 2012 year, the first quarter of 2012, was so strong. So yes, you're right. The total level of quarterly earnings is at its highest level that we have seen since this earnings cycle got underway. I've actually brought a chart for you.
Yeah.
And this clearly shows we have been bouncing around in the 245 to 246 billion dollars quarterly level, and this is total quarterly earnings. When we take the EPS, multiply that by the shares outstanding, and aggregate that for the entire S&P 500, and you could see here that we are at $251.6 billion for Q1. So the level of earnings has been at a quite high level. The question has been how much can you grow on top of that? And that's always when they talk about the law of large numbers at play, that's what we are seeing right now. The base has grown enough that just modest improvements doesn't move the needle anymore.
I think the first question before we talk about projections is how can this even be with all of the abnormally high top line growth that's still out there?
Yeah, that's a really good question. And I want to step back a little to address the revenue question. There are three aspects to top line when we are discussing sales or revenue. Number one is the total level of sales along the lines of what I show in the first chart here. And then the growth rate in revenues, and third, the level of surprises, so how revenues came through relative to expectations. The level of revenues is not bad. Just like earnings, we are bouncing around record levels for revenues, and I brought a chart for you for that too, to just show it. You could see we are bouncing around the 2.6 to 2.7 trillion. That's with a T, not a B.
Right.
Over the last many quarters, and we are right around that same level in Q1 13 as well. Growth is off. Growth is off on the earnings side as well.
Right.
So on the earnings side, we are probably looking at 2.5% growth. On the revenue side, it's a shade lower than where we were this time last year, and surprises are overwhelmingly negative. So how can earnings grow when you have this kind of a picture on the top line front? You keep revenue stable, and you keep margins a little bit better than what you had last year, and you get to 2.5% earnings growth.
Interesting. Let's recap Q1 here very quickly. What are you looking for as far as earnings growth, and what are you looking for as far as revenue growth?
Yes, we're practically over with the earnings season. About 450 companies have come through. Another 45 companies are still to come. About 2/3 of the companies have beat earnings expectations. Only about 40% of the companies are beating revenue expectations. We have, by the way, all these details in the earnings trend piece.
Yes.
I couldn't help plugging that write-up that I put together.
And I will let them know how they can access that. Yes.
Okay. So the overall growth rate, when all is said and done, would come in the 2.5% range on earnings, total earnings, like the way I showed here in the first slide, and on modestly lower revenues. So the revenue growth would be less than 1%, about 0.7% lower, 0.8% lower, kind of in that ballpark. and a tad bit higher margins. So what we are looking at now is about 25 to 30 basis points higher net income margins compared to the first quarter of 2012.
All right, let's take a little look out a little further. Projection for earnings growth on the year. Where do you stand on that?
For the full year, it's the estimates have started coming down a little bit. More pronounced negative revisions for the second quarter than for the back half of the year. If we go back to the first slide, that gives you a good idea of the quarterly totals. You could see that the 251 that we were looking at for Q1, then in the third quarter it gets to close to 260 billion, and for the fourth quarter it's close to 276 billion. So expectations for the back half still remain quite high. And as you know, I have been quite skeptical of those expectations. So overall, for the full year, expectations are for total earnings growth of about 6.1% at this stage,
Okay.
and another 11.4% in 2014. This is a little bit of revenue growth, and primarily driven by margins. And as we have been seeing over the last many quarters, and as I have been saying for quite some time, margins, in my view, have already topped out, and I don't see them expanding much more. Let me just make one additional comment on
Go
that.
ahead.
The revenue growth or lack thereof broadly in the aggregate for the S&P 500, when you look at the sector levels, there are some standout variances among different sectors. So technology, the biggest sector, doesn't have a revenue growth problem. What it does have, on the other hand, is a margin problem. So they have 4 or 5% positive revenue growth, but their margins are down. The expectations are that in the out quarters, particularly the back half of 2013 and 2014, margins for the sector improve. I don't see where those margin improvements are going to come from.
And you've been saying that for a while.
That's right.
Yeah. Now we add the other dimension as far as the corporate side is concerned, that corporations have been given the permission to go ahead and put earnings news on Twitter and social media like that. Do you see, in your opinion, corporations breaking any momentous news regarding their earnings on these social media sites going forward?
I'm still not on Twitter. I haven't tweeted yet. I'm not sure whether you are or not. But my assumption would be that the overall thinking and view on the corporate side would not be much different than my view or your view. They probably would be careful of all the regulatory and compliance issues that could come through, but we are living in new momentous times, and many of these things we hadn't foreseen the last couple of years, and they are now here. People are talking about their Twitter handles.
That's right.
We need to come up with our own Twitter handles.
Yeah, I'll work on that. Thanks. So much going on in the earnings world. It's never have enough time here with Shiraz, but as he mentioned a while back, you can always take a look at his text version of his earnings trends piece that he updates periodically throughout earnings season, and you can get that at Zacks.com if you're not at the site already watching this video. All you need to do is go to the homepage and click on the earnings tab at the top of that homepage. It'll take you right to the earnings section of our website. With Shiraz, I'm Terry Ruffalo.